An AML compliance officer for a large bank has recently received an internal audit report on the private banking unit. The report revealed that the unit staff were not following risk-based due diligence procedures, so that the unit was not operating efficiently. Which immediate actions should the AML compliance officer consider to address these findings? Choose two. You have total 5 options. Option A, the board should review and approve a revised AML policy to change customer due diligence requirements in private banking. Option B, all employees should receive refresher AML training. Option C, the legal department should conduct a review to assess potential legal consequences. Option D, private bankers should receive training on AML procedures. Option E, management should implement a quality assurance program in the private banking unit. Choose 2 out of these 5. You may pause your video and we'll see the answer on the next screen. So D and E are correct. Let's see why A, B, C are wrong. So you see the A is wrong because the policy does not need a change. The CDD requirements are fine as they are. The problem is that the staff are not following them. Revising the policy to change CDD requirements would actually make things probably worse. You would be adjusting the standards downwards to match the failure instead of fixing the failure itself. Option B is also wrong. The problem is specific to the private banking unit. So rolling out or arranging an AML training for every single individual employee across the whole bank does not address where the problem happened, which is private banking. So it just dilutes the response and wasted the time and resources for the entire bank. Then option C is wrong. Legal review might become relevant later if the failure created any regulatory or legal issues. Okay, but right now the immediate priority is fixing the operational problem. Getting legal involved before you have even addressed the training and monitoring gap is just jumping too far ahead. Now option D is correct and E is correct. Option D, the audit pointed directly at private banking staff not following due diligence procedures. So the immediate actually response goes straight to those people particularly. That's the key domain. So given them training, specifically targeted training on exactly those AML procedures, not the entire bank, not the general refresher training. The private bankers who are getting it wrong need to understand what the correct procedure are and why they matter. You fix the problem at the source. Option E is correct also. So training fixes the knowledge gaps, but how do you know I would say that it's actually working afterwards. That's the reason you don't do these kind of things unless you put something in place to check. That's become a quality assurance. That's where you have the quality assurance program inside the private banking unit that gives management visibility over whether procedures are now being followed correctly and consistently. It's the monitoring mechanism that makes sure they fix the issues properly.